everybody, this is Sean James from Kryptonite Capital. Thanks again for hopping back into another YouTube video. Today we're going to be touching on the topic, why central banks hate silver. They really do, and I'll touch a little bit more into that. But let me tell you a quick story first. I'm pretty sure you know about the whole tale of the werewolf. You know, there's this big hairy beast who is a man by day, but he turns into a wolf every time there's a full moon out. And once he turns into this wolf, he rampages through the village, eating and devouring everything in his path, until every single last person there is under the clasps of its mighty jaws. And the only way to kill this werewolf is through one silver bullet right inside the head. Sound pretty familiar? Well, in this story, the metaphor is supposed to represent the central banks, and they just devour anything in its path, devouring people's debt to make them essentially debt slaves, and making people subservient to them for all eternity. And the only way to kill this central bank system and their paper fiat currency is, believe it or not, silver. Now, it's going to take a lot more than just one bullet to kill it. It's going to take a lot of bullets. But, needless to say, silver has got a bright future ahead of it. And here's why. Before I get into this whole notion of why silver is seen as kind of a cheap metal in a lot of the eyes of central bankers, let's take a step back a couple of hundred years ago to 1873. To be exact, when the Coinage Act was introduced in the United States. Because silver was running short on supply, a lot of people started to hoard all the silver. And the federal government stepped in and said, no more issuing out silver to anybody, you gotta hold on to the silver certificates. This incentivized the central banks to keep all the silver. But at the time, there was another act that was introduced around the 1900s, the Gold Standard Act. It effectively demonetized the currency system of the silver, just made it gold. And in the 1930s, this was further exemplified by Franklin D. Roosevelt. He was the president at the time. During the Great Depression, a lot of people started to hoard this gold for themselves. And similar thing happened. He told everyone to give their gold certificates to the bank. And what happened then is that the central banks, they lost faith in their silver because they saw that it was getting demonetized very quickly. So they sold it out. That's why very few central banks to this day, they hold any reserves of pure silver. It's usually just a silver certificate, the paper kind, not the physical kind. Very important distinction that needs to be made. And if you've been noticing, a lot of the silver is inside the mints of each nation, not the banks. But there is gold. Central banks, they do have a lot of gold in their reserves, and that's mostly because in order to push out their paper fiat, they need something to attach it to that makes the people trust in them a little bit better. While they may not use this gold for their own purposes, it acts more like a marketing tool for them. I know, kind of hard and a little bit ratty, if you ask me, but that's the way it is. But another reason why the banks just hate silver and really just want it to die is because it doesn't work in their best interests. With silver, you got something that's physical, like a coinage system that's attached to this physical material. So if the supply of silver runs low, the price will go up. It follows the law of supply and demand. Central banks, they don't like that. They want to be able to print as much money as they can so they can keep lending it out and keep giving it back. And you keep borrowing money from them and you keep depositing money into them, they'll keep lending it out and they collect interest with that too. That's how the traditional financial model worked. It worked for the Rothschilds, it worked for the Medici family, and it worked for the Knights Templar as well, all the way back then, and it was working today too. But this old guard, this old system is going to come to an end, and a lot of these central banks, they're catching on. If you've been noticing, you can see them getting all the silver and buying it all up. And there was this recent story on Kitco about both China and Russia ditching the US dollar in order for gold, yuan, and other types of currencies. That has a large part to do with the Biden administration's $6 trillion spending budget, which, if I'm being honest here, a lot of that is recorded on the off-balance sheet. So my best estimate is that $6 trillion is a lot more than what they're pitching out. So that dollar, it's going to be devalued a lot. Possibly in the next 5 years is my best estimate. And another reason why you should definitely be optimistic about silver and what the central banks are seeing, why they keep investing a little bit more into it, it's catching their attention, is because when gold runs out, when a lot of people stop looking at gold to put back in their reserves, they go to silver. It's a similar property, but it's a little bit more affordable and gets them a lot more attractive for other countries. And I'll show you a quick graph over here. I'll put it up. There you go. And this graph is representing the gold-silver ratio. Now this is a really important ratio to examine because it shows that when the gold and silver ratio are kind of in the same level, there's a specific trend that will show bullish patterns, which could mean that prices go up for both of these metals. And look at the chart very closely. You can see that once it reaches that 15 level, that 15 price ratio level, it shoots up. A huge bullish gain. Higher highs, lower lows, the whole shebang. And that's what we're looking for. Right now, the gold-silver ratio, it's around, I can't see it right there, but it is around I would say 10, the 10 mark. So if you keep, not the 10 mark, sorry, the 20 mark, and if you keep going down, looking at the trends of silver right now, it's looking like it will push down a little bit lower than that, which means, according to the historical data, it's going to be one hell of a bullish market coming very soon. Or not so soon, you know, I'm not a financial analyst or anything like that, so I can only offer my best guess, my best accurate guess. So hopefully you enjoyed that. But I'm so glad that you could join me for today. There's going to be plenty more videos like this where I just educate you about silver, what the market is saying about silver, and just some general information about it, because I love silver and I know you do too. Last words before I sign off here is we are opening up the first silver bank by the end of August, early September, so definitely look out for that. It's just a minimum deposit of $1,000, and we give you a 3% annual return. Plus, you get to keep whatever spread there is, spread difference, between the spot price of silver now and the spot price of silver, let's say, a year from now. And we also offer amazing loan services with affordable interest rates, so definitely check that out once you click the website link in the description below. Also sign up to our mailing list, because when we open up, we're going to be giving you a free silver dollar, American or Canadian, whatever you choose, to the first 100 people to open an account with us. So be sure to look out for that. And don't forget to click that subscribe button, hit that notification bell, and I'll see you in the next video. Signing off.